Okay. Okay, that's okay. So this is another installment in the video series, Pls Fix Thanks on this channel. The point of this video series is to examine notable or large losses done by popular and successful traders. The idea is even traders, even incredibly successful traders with amazing amounts of trading experience and really great systems that give them 80% win rates and all the advantages in the world as essentially as a day trader competing in that competing in the markets day in and day out. Even people like that can lose, and so the whole point of this system is to examine a loss and look at how my particular system, which is the Turtle Soup CRT perspective, how can that essentially find a blind spot that they didn't see, and how can deploying Turtle Soup methodology or candle range trading, how can that maybe allow you to avoid that loss and maybe get a win on that same trading day given those same conditions instead. So the trader that we're going to look at today is Dodgy. Dodgy is actually one of my favorite ICT traders. He's the pioneer of the IFVG system with really good discretionary risk management. I mean, he's like the most consistent, durable trader with a super high win rate. Super humble guy. He trades in front of people live every single day, I think on a private Discord, and will trade occasionally on YouTube. So if you find his channel, I think it's called like Dodgy's DD or Dodgy's Dungeon. He's got awesome videos on his channel. He's got a great sense of humor. I got nothing but respect for the guy. So on Thursday, January 2nd, it was a really tough trading day for a lot of traders. It was non-farm payroll release for the data covering June, and because of the 4th of July holiday being on Saturday, U.S. markets were closing early on Friday for the week, so they shifted the data release to 8:30 a.m. on Thursday. Now, Dodgy's system is he usually trades the NY open, actually a little bit after the open, and he looks for his IFVG entries that conform with a higher time frame bias usually. And so I think what went wrong his two trading days, partially what went wrong is he essentially had the wrong bias going in after the news. In other words, I think if he had, and this is totally different to his system, but if he had traded some IFVG entries further back in time, so if he had traded into the news rather than traded kind of the market reaction, an hour plus after the news, well, he might have had a successful scalp, right? Anyways, I'm not saying that that's something that he should do. He knows on average what works best for him. He's obviously a super successful trader, way more successful than me. He's not doing all of his wins don't come from prop firms. He's like self-funded at this point. He's a professional trader. He's got a really successful trading theory that he's authored. He's got courses. He's got a YouTube channel. I mean, I just have a lot of respect for him. But looking at these shorter time frame scalp longs that he decided to take on the Nasdaq, and he's deploying it on the MNQ, the micro Nasdaq. He's essentially he's becoming victimized by a turtle soup, a bearish turtle soup, even though he's bullish. So essentially but it's not like he's trying to trade a breakout. He is. He's looking for essentially a true breakout or a kind of a swing back into old highs in a way that doesn't cause too much choppiness into the sell side liquidity where his stop losses are. So essentially he's trying to look for kind of like either an internal liquidity breakout or for the market to head all the way up into the all-time highs. So yeah, so he's got 2 trades. He executes one at around like 9:36 a.m. on the minute chart, and he executes his second trade, I think, a little after 10 a.m. on the minute chart. And both of those trades are losses. I think he had a break-even trade in between. He mentions it in the video. Go back and watch this video. There's an awesome commentary on market psychology and about like scaling up and like the psychological pressure of like trading big and like watching your P&L fluctuate up and down, where it's like very, very meaningful sums of cash that have been, large chunks of equity at risk and large changes in your P&L for any given like second that you have a position open. It's a much different psychological circumstance. I mean, to kind of use a poker metaphor, you've bellied up to the high stakes table in the trading world to start risking, more than 10 contracts in MNQ. So I'm going to switch over to FX Replay, and we are going to look at, actually, before I switch over into FX Replay, I just want to show you a brief snapshot of the bearish turtle soup that I've identified on the 2-hour time frame. So this slide shows a candle range that's formed due to the market becoming slightly oversold here with that wick, and then accumulation occurs. Then there's this push past the wick into the 8:30 a.m. news release, and then this is the 8 o'clock 2-hour candle in NASDAQ. It opens, and then in response to the news and in the lead up to the 8:30 news, it essentially goes like parabolic on the lower time frames, which forms this large bullish candle. But soon thereafter, the market turns bearish. And on the lower time frames, you do get essentially an entry signal to be short, with the foreknowledge, with this logic in place that we are having a turtle soup of the previous accumulation range. So if you've watched any of my other videos, the way that I approach the turtle soup is I mark essentially like a displacement candle that I tend to mentally define as the candle which essentially caused the trend to become overbought or oversold with respect to like some sort of equilibrium in price, whether it's the mid volume or the mid order book. So I can't remember, and we can look at this on FX Replay, but this particular 2-hour candle that is a bullish candle with a very long lower wick. This candle is the first candle essentially that causes the market to then start ranging, right? And so I always like to count these candles. You can slander me all you want, but I'm a candle counter, and I always like to look for the range to either have 8 is a sweet spot for me, but 7 is kind of this allowable kind of a quicker turnaround for the range, so it's anywhere between 7 and 12, with 8, 9, and 10 being the kind of modal sweet spot in that kind of and it's a wave analysis really, because the market's essentially gyrating as it's ranging. It's forming kind of a sine wave, and so there's 7 candles in this particular range that I've identified, and with the 7th candle being the manipulation candle. I'm just gonna, so what I'll do is I'm gonna go to FX Replay, and we can use FX Replay to diagnose things that you can't really see in this like static picture of TradingView. So you can't really see like a good draw on liquidity here. I want to show you what the draws on liquidity were that I identified for that day. And we also can't switch to a lower time frame to see the lower time frame signals or the lower time frame entry models to then be able to get short during the NYAM session to properly play this thing. So let's do it. Go to FX Replay really quick. So yeah, so switching over to FX Replay. My microphone got unplugged. Let's see if I can get it back here. Test. Okay, So we're switched back into FX replay. It is now 8:30 a.m. Eastern Standard Time. The market has had a full minute to process the news. So switching to the minute chart, we can see in the lead up to the news dropping, there was essentially a the market was bearish, and then it had this kind of a what I would call like a false market structure shift, and then that formed the high of this 2-hour candle, or let's even breaking it down on the 1 hour, right? It was that particular high there is like the false market structure shift. So that's essentially like the transition between this little fake out to go long and then this stab into the further sell side liquidity. This essentially creates this range. And Romeo, who's the originator of the CRT process of trading, the CRT logic, he kind of has this like good news at the top, bad news at the bottom heuristic. And so I hopefully I explained before the result of the NFP, but I'll do it again. So the NFP news came out, and it was essentially dovish for U.S. Fed policy, because it was a slightly weaker print than the consensus economic projections had estimated. And so essentially that ends up being good news at the top for macro-driven traders, and I'll put it this way, a lot of retail traders, right? And so when the and this is like a really like there's actually alpha on strategies like this where I think it's called like news drift or essentially momentum news trading, where like you don't have to be able to predict the news and get in before the news drops. You can actually like see an 8:30 good news come out at 8:30, wait until market open, and then have a continuation, like exactly what Dodgy was trying to do. So good news with NFP, we form like I don't think it forms a data wick high. And like that term data wick high, that's not from Romeo, that's from Dodgy. Like I learned stuff like data wick high. There's so much stuff I've learned from Dodgy, like to really look out for LR. Like, so again, the point of this video is to not trash Dodgy. Okay, so there's going to be kind of I'm going to be juggling two different trading perspectives simultaneously here. So hopefully you'll bear with me. But from the Romeo CRT perspective, what we've done is we've slammed into a key level, the key level being the previous swing high of the of the hourly chart, right? And it's the candle range of a 4-hour candle there, and 2-hour candle is important for me because of my analysis. So this like 2-hour candle range here is the important swing high. And then, of course I can, you can do your candle counting, right? Your 1, 2, 3, 4, 5, 6, 7, and you'd expect 7, 8, 9 to be manipulation into distribution. So yeah, going back to the minute chart now, because that's where kind of Dodgy's analysis was living. We actually do have a model number 1 on the minute chart. We probably have a model number 1 starting to develop on the 5-minute chart as well. We haven't retested the candle body yet. Hopefully you don't mind. I hope you don't mind me kind of like fast forwarding to what I believe is the interesting part of this, which is Dodgy's entry now. So essentially, like if you're an aggressive CRT trader, you could already be short. In other words, swing high on the minute chart, we close below, we retest that little candle body. you could treat this candle as and it happens to be the news candle as well, which is really kind of convenient from like a price and volume perspective because it's going to be such a high volume executed on that particular news release. But yeah, we had a close below that particular candle, right? That broke the high. So we closed below the candle that broke the high, then we retested, right? So we close below, then we're going to retest. And of course, into the market open is a further retest of this candle, as you'll see. So we have a true market structure shift in progress. We have a 1 minute model number 1 in progress. We have probably a 5 minute model number 1 and a 15 minute model number 1 in progress. But let's pause our CRT analysis and switch over to IFVG analysis. So here's the problem with being a bullish IFVG trader at this point is, and I think Dodgy admits that this isn't his system. So Dodgy's system is to look for like a singular FVG, IFVG, and he admits that this is like a discretionary entry. It doesn't quite fit his model because it's stacked bearish fair value gaps that then just get eclipsed and closed above. But yeah, so he gets long here with his stop loss right around there. I think his stop loss actually might have been a little bit, well, anyways, he gets stopped out. That's the most important thing. We're not trying to like mirror his trades exactly. So he gets stopped out right there. I think he said it was about a $10,000 loss, which is a lot for him because he was scaled up a little bit more aggressively than he normally does. So then he's waiting and waiting for another swing low bearish FVG to form. Okay, so as this bearish FVG forms, actually I think I've got this a little too much. I think it's this bearish FVG, and then he tries to enter. But anyways, don't worry, I'll reverse engineer his second trade as best I can as being a non-IFVG trader. This right here, if you noticed, we've just cleared that key level again. So the swing high. And so this is your retest of your essentially order block here. I call these order blocks Romeo order blocks. I mean, you can call me a fanboy for doing that. But here's on the 15-minute chart. It's not quite a 15-minute model number 1 in the classic sense because there's no bearish FEG that forms. But on the 5-minute chart, it sure is, right? Multiple bearish FEGs. Actually, just one, not multiple. But anyways, a nice like retest at that point. You never close above here. You only wick into it and then dump lower. So your turtle soup is on right now. You're short at that retest, and obviously your take profit is going to be the low of that 2-hour, the swing low of that 2-hour candle, and then I've identified another take profit down here as well that just happens to get taken out for that day. Now you might call that hindsight, and it is a little bit of a more exotic level. It's not quite even a swing low on the 2-hour, but I noticed that this is a very long wick, and long wicks tend to be price inefficient. It's actually also a long wick on the hourly, which I think is pretty price inefficient. If you go to the 15-minute, what happened was it's essentially an order block because you have a large fat down close candle, and then immediately the price rips higher without too much retesting like that swing low. So you could take that swing low and make that your second take profit and just say to yourself, well, we might not clear this swing low that same trading day, but we have a pretty high probability. Like if we've already like smashed through that take profit, then leave a runner on and just let it continue to there, and that would be like a good like kind of final target for the day. I want to go back now to Dodgy's second 1-minute IFVG entry here, and let's see if I can reverse engineer that. Geez, I'm hoping it wasn't that one. I don't think he took a 30-second. But I actually also don't think that price... Oh, he does. Okay, so we've really traded back up again. That's a potential entry right up there. That must be his entry right there. Yeah, so please forgive me. Let me just check. Let me just cheat by going back onto PowerPoint here. I actually want to look at the screenshot of his video now. Yeah, he did. So that looks really awkward to me, but I guess he did just kind of like snap long. You know, just kind of pull the trigger. So in other words, we do have that IFVG being filled, and then he's waiting another minute to go long there. But even if he had waited for like a full retest, he still would have been stopped out. So a loss is a loss is a loss. But yeah, I don't think anybody should feel bad for Dodgy. I mean, Dodgy is like, 100 times more successful than even the most successful traders in the trading space. I mean, he's kind of on a level of his own. But yeah, let's let it play out to first target. And you can see that there isn't really even like a hesitation at the halfway point of the range. You could probably call this the hesitation at the halfway point of the range, and then like a nice deep, an OTE entry essentially, with that being like the high and this being like around 90% of that. But then there's a pretty good hesitation there, and then a dump into the what I projected as like the most, distant point of sell side liquidity. Lots and lots of points lower. I mean, like here's the issue with like picking huge targets after a news release is a lot of times volume tends to ebb, especially into a holiday. And this actual minute chart reaction to the news is a little spooky to me, to be like, to see this minute chart reaction and then to not really like, to be like, okay, well, that's all the reaction was. That's all the delta we get from that news kind of like percolating out through, the whole universe of NASDAQ traders. Then it's like, well, how much follow through are we really going to get if we've already kind of turtle souped that minute candle high, the reaction high, and then lower? I mean, it's a race against the ebbing volume. So that's another reason why we might not hit that swing low from before. But yeah, so that's pretty much it for the Dodgy breakdown on the Pls Fix. Thanks. I'm going to go back to the 2-hour chart again, just to give you a picture of that. So this is your reward. So your reward for keeping a turtle soup mindset is you've understood when a range has formed. You've understood that news could be the manipulation at the end of the range, and you've patiently waited for the full extent of the manipulation to occur. Then you've used your short-term entry model, your 5-minute model number 1, to get short, and you've held to your first target. You might use dynamic risk management, and you might have taken your half your position off the table, move stop to break even, and then let the price run until some sort of logical, whether it's a fib base, like a measured move, right? Let's see if it makes it to the measured move. It might not even make it to the measured move. Yeah, so it did. It made it to the measured move. So yeah, it's another way of like framing the trade. It's like a 100% fib extension. But yeah, thank you so much for listening. I'm so excited to make these videos. I'm excited to trade and to become a professional trader. Got nothing but we should all look up to Dodgy, especially for how honest and how transparent he is. And the good news about Dodgy is he's back on the horse. He had a great trading day today where he took essentially like had a successful trade. If you go to his YouTube channel, it's like the most recent short, I think, is like outlining his successful trade of the day. So he's like back in style. His system's working as intended. It's gonna work as intended. I mean, past results are no predictor of future performance, or past performance is no predictor of future results, yada, yada, yada. But essentially, like a proven system is a proven system.